We want to just get in a quick chat on the IT sector and do a discussion around it. Sandip Agarwal, fund manager at Sowilo Investment Managers, is with us now. Sandip, morning. What's the investor appetite for TCS now? Today, there is a block deal on offer, close to about 2.3 crore shares, and you will get it at a slight discount. How are investors viewing TCS at current levels and at this price?
Yeah, good morning, Rima, and thanks for having me on the show. I think, this is a wonderful opportunity for the investors to lap up a big chunk of one of the best and market leader in the tech sector, and at a good discount, I would say. And that too, when most of the clouds around US economy are slowly fading away, and also the interest rate cycle seems to be almost peaked out, and we may see a cut cycle starting soon. And just to put things in context, if you see a stock like Microsoft is up almost 67% in a year, despite all the fears of US recession and hard landing. So I think we are always the natural beneficiary of the FANGs doing well, because the product engineering side, we participate in many of the projects along with them. So I think it is a wonderful opportunity, and the price is not at all high. And the whole upcycle of the tech sector, which should ideally start up once the interest rate cycles cut starts. I think it is a very, very good win-win situation for the investors at 4,000.
Sandip, but just the near term, all the companies we've spoken to in the last 1 or 2 months seem to suggest that there is no improvement in demand. The environment is still very cautious, which makes us believe that the Q4 is going to be subdued, and maybe even the guidance for FY24 will be laced with caution and conservatism. Just in the near term, can you talk about the demand environment, and what have you picked up in terms of the trends, and what could be the guidance from the likes of Infi and HCL Tech?
So Rima, you are absolutely right. If you listen to any of the management right now, if you meet the tech expert, no one is willing to commit a bigger number, or no one is saying that the future will be good, because they are commenting on what they are seeing. But I would only like to highlight that in last 22 years, you will get at least 11-12 instances when from a very, very negative outlook, within 1 quarter, the outlook has changed dramatically. And it is not very long history. You just go and see post-COVID what happened. During COVID, everyone was guiding for a negative growth for the full year, and everyone ended at a positive growth. Post-Lehman crisis in 2010, I remember one of the largest Indian IT company guided for a negative growth for the next full year, and that next full year was actually a 15% plus growth. So, this is the risk which investor has to take, keeping everything in context. And I think if interest rate cycle cut starts, a lot of money will be made. And if FANG stocks are doing so well, they are all like, almost at new high, except 1 or 2. I think, the flow of work will definitely come. So I would say that, yes, today, based on commentary, it looks negative. But I think if you take a 6 to 12 month call, there is a lot of money which will be made, because the Indian IT sector has not at all benefited from the what has happened in NASDAQ and what has happened in the Big 7 in US.
I mean, actually, it's a hurt, right? Even as we're talking about whether the US economy is in great shape or super great shape. And the market, and here there has been nervousness for the last year and a half or so. But Sandip, Coforge, before we get to some more of your picks, right? Sharp weakness yesterday. Did you expect it? And again, I mean, on that specific name, if you track it, is it an opportunity to buy?
So, we run a PMS, so we can't recommend a stock. But let me put it this way, that, in case of Coforge, the problem has been that, there has been consistent supply from the private equity, because of which, investors, although all the investors have always made money at the level which they got the, supply. But now this is something new which has come. Obviously, people are very curious that what is going to happen with this money, and if there is some allocation which doesn't go, or which doesn't generate the kind of return which investors expect, then obviously there will be pressure. So, Coforge, exceptional management, very good quality execution, and very good delivery, but consistent supply. And now this new thing has been something which, investors are very difficult for them to comprehend, because the supply is consistently coming. So I think that is one concern which has been there, and because of that, the weakness has showed up yesterday, in my view.
Sandip, in 2023, mid-cap IT greatly outperformed large-cap IT. What is the broad call coming into for 2024?
So, I think that the mid caps, which are doing extremely well, and they are, in specific segments like product engineering or ER&D and all, they were supposed to do well and they will continue to do well. The only thing is that, sometimes the valuations are looking so expensive that you have to think that, there could be phases when there could be time correction, those could be elongated. And other than that, I don't think there is any challenge because see, this mid caps, which 5 years back didn't get any, used to get 50% discount multiple to the large caps. Now they are still being called mid cap, but the sizes have gone up dramatically. So, while in the context of TCS and Infosys, they may look like a mid cap, but they are no more mid cap. So if you compare the size of today's mid cap, they would be 10 years back, they would be the size of what was the size of large cap. So I would say that, this company still will outperform in terms of growth by at least 2-3% the large caps, but the multiples also are very demanding. So I would say that, we have to be cautious about what we are paying for the companies for a slightly higher growth. But overall, I think, the sector is going to do very good. We are just a quarter, 2 quarter away where you will get a lot of clarity on the strong demand environment, which should, open up because the product, we will be natural beneficiary of the contracts which should come through from the largest economy.
So you expect the demand environment and the commentary from the managements to turn positive in a quarter or two. But in April, when Infy and HCL Tech give their annual guidance, what's the street expecting, and will it disappoint or will it positively surprise?
So, in case of Infosys, they are ultra conservative always, and barring 1 or 2 instances when, their ultra conservative guidance also they have to cut down. That has happened in the past, primarily when leadership changes were happening. So I would say that, they will continue with their conservative stance. And if someone wants to be, taking a call on the sector based on only one company's guidance, then it will be little, challenging. But I think that HCL will not disappoint on the guidance. I think if the expectations are reasonable, I think the guidance will come through. And as I said that, maybe in June, July month, they will get more clarity on the demand environment. Right now, budgets have been freezed, but budgets always have an opportunity. Some of the clients can come, new clients, and those things can happen. So I think, we should not bet our investment only on the guidance which company is giving, because in the past, there is clear history that guidance have been always beaten very nicely with a substantial margin.
But any number that the market is expecting from Infy and HCL Tech?
I think, everyone is at a high single digit kind of range. And I think that number should come. And there could be some positive surprises as we go on execution in the second half.
Got that. By the way, Sandip, just a quick question. Are you, in your PMS, are you only focused on IT and tech?
No, it is a general PMS, but obviously, there is some flavor of, higher flavor of tech or proxy plays.
And since we have you with us, what are the other areas which you're very bullish on? Where you still find lots of opportunities? Yeah.
We see this whole PLI scheme, since the manufacturing sector is our focus area. Also, we are very positive on some of the power sector ancillaries, like primarily on the transformer side. We are also very positive on the per capita plays. So these are the 3 things which we play: manufacturing, per capita income rise, and the power ancillaries. These are the areas where we are focused a lot. And I think there is a very good run up in next 5-7 years in this space.
Sorry, per capita theme? What?
Basically, this all these restaurants and the retail chains and the likes of Titan, Trent, and all these things.
Okay. All right. Got that. Sandip, great conversation as always. Thank you very much for joining us and running us through what you're making of the IT space and a bit more as well.